Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Friday. Hope everyone's doing great. All right, so we have a couple of hot zones. Actually, just a one on the schedule for today. 9:45 a.m. Services PMI. I don't suspect it's going to be a major mover for us. However, when left with nothing else to react to, oftentimes sort of these lesser hot zones become a little bit more impactful, become a little bit more in play. So we'll keep an eye on that one about 15 minutes after the bell rings. What are we inheriting this morning? You can see here that tiny little candle sitting below yesterday's rally candle is showing perhaps a pause. I don't know. Obviously we've got a range. We had some inside candles on charts yesterday, and those inside candles, ended up expanding past their pre-market range. That could clearly happen here today. And what we always want to remember is there's a very different mindset to sort of hedging, right? Where I'm going to say, well, we could move higher or lower. No duh, Raghee, right? What I will say, and I won't hedge, is this is a still non-trending market. Yes, we've had a lot of bullish momentum. However, the bullish momentum is happening within an overall choppy or distribution type market. This is the difference between understanding market structure by only and really incorrectly or incompletely defining just the trend and looking at the momentum within the trend. And that's, of course, what we want to do by using the 8, 13, 21, and 34 exponential moving averages, looking at the way they're behaving and separating out near-term momentum from the bigger trend. I will still view what's happening on the NAS, on the daily, which is the chart you see there on the on the right. I will still view this market as largely an overbought market. Let's try that again. Sorry, gang. That was the first time it's happened in about 2 years. All right. Do we have audio and video back? I think we should be good. I think we're good. Let's see. Yep, we should be back. All right, that was strange. The camera just said, "Nope, it's Saturday," and I'm checking out. All right, so what I was saying is, you want to remember the difference between a market that's rallying within the context of chop or a range bound area and an uptrend. I do not have an uptrend on the charts. I am still looking for some level of overbought. So what I was saying is, Just because this is overbought doesn't mean we have a setup. It just indicates the kind of setup that I'm looking for. So please keep that in mind. In an overbought, oversold environment, I'm going to be focusing on a slow stochastic. That's my preferred way of doing it. It is overbought. However, even though I'm in a choppy market with an overbought stochastic, I think what's even more important to remember is I don't have a setup yet. I don't have an inside day that's held. I don't have a minor high pattern that I would like to look at. I need to stop at either a volume ledge or at a support and resistance based on my Darvis 2.0. I need something to say price-wise, we've reached that peak. We've reached that overbought peak. And now the sideways market and the overbought stochastic, they're all lining up. So please keep that in mind. So yes, absolutely looking at the S&P, the NASDAQ, the Dow as being overbought, do not have it set up. However, in the meanwhile, for example, a lot of you in the Sector Secrets room, and I see a lot of you in here, a lot of you remember, what did we do yesterday? Just because I'm not buying on the end of day chart doesn't mean we don't have buys on our intraday chart. And if you have not checked out the free video, everyone here in this room can check it out. It's the free video over at the Simpler Trading YouTube channel. Let me see if I can't find that here. There we go. Let's see, free video. And it was called, and I forget when I call my videos sometimes, 3 time frames, 3 setups. And what I did is in that video, I looked at the 5-minute S&P. We did a lot of our members at S&P. We did NASDAQ as well. Got long. Why? Because intraday on a 5-minute time frame, it made perfect sense to fade by the hourly price movement range, otherwise known as the HPMR. Took advantage of that. Did I buy on the daily expecting session after session after session of follow through? No, I just looked at today, day traded it bullishly, and then we'll do it again this morning. I'm going to be in the Sector Secrets Mastery Room at 9:20, and we're going to look for opportunities again. Maybe it's going to be to the short side. That's the wonderful part of while we're waiting for the daily time frame to organize, give us a setup, trigger that setup, and allow us to enter the market, we can focus on shorter term time frames and take advantage of the movement, and some of which has been very volatile, intraday, right? Manage multiple time frames, and that will allow you to manage multiple time horizons. And sometimes a longer time horizon is tricky to sit through, while the shorter time horizon, right? How long are you going to be in the trade is easier to sit through. All right. So that's my big message. It was what I talked about in the free video yesterday, and I hope you all can check that out. And in the meanwhile, gang, of course, and by the way, I'm using the Trading View charts today because I get a lot of people asking, Rog, what about Trading View? Yeah, I'm a big fan. I'm absolutely a big fan. So we got the Trading View charts going today. So let's dive into the questions. All right, so just bear with me. And first up, and thanks for sitting through that weird little tech thing. The camera just decided it was Saturday. All right, so let's take a look. Sam, how are you? I'm in Sector Secrets. Cool. Would like to get my feedback on also using MACD or Hull for additional confirmation. So Sam, I'll tell you this. I've used MACD for a lot of years, and you'll notice that in the labels that I give you all, the PB oscillator labels, CCI, stochastic, and MACD are in that. MACD for me is more of a momentum confirmation. So if I'm looking for a breakout or breakdown from a range, or if I'm looking for follow through resistance, I would like the MACD to confirm that. And anytime I am sharing an indicator with you, rest assured, it is something that I have used usually for years, if not decades. I don't have that kind of time of real hours. I mean, lots of hours and trades using a Hull. So I'm not going to say it's good or bad. I'm only going to share things with you all that I'm actually using, have used to productive, good results, and have used for a lot of seasons in the market. One of the things that I find incredibly irritating in the sort of indicator world of trading is someone kind of cooking up a new way to crunch up open, high, low, close and say, hey, look, I found a new indicator. How long you've been using it? Oh, 6 months. Okay. So even though my minimum is basically 6 months and a 60% win rate using that particular indicator and strategy, the reality is that's the bare minimum. And I've never, ever released an indicator that has such a minimum amount of time sort of behind the wheel. So years, gang, years. And I don't have that for Hull, Sam. So that's why I won't make a comment on it. But yeah, you could use the MACD, but that is the context within which I use the MACD. Momentum through resistance, momentum through support. All right, next up, Mark, how are you? GLD is double red and pulled up. Well, let's go take a look at GLD. I would like to short gold. I'm going to start with GC. We'll migrate on over to GLD. I would like to short gold. Gold futures have only managed to bounce to the second dot of a 13 EMA. While that is better than nothing, take a look at the volume ledge sitting at about 1740. I would rather see that volume ledge get reached. If I add in a little bit more of the year, 1740 is still very much in play. So if there is a level, and by the way, for those of you that are not familiar with this volume ledge thing I'm talking about, I don't care about date or time-based volume. It's really not that helpful to the way that I look at the market. In other words, do I care that there was volume on Tuesday, or do we rather prefer price-based volume? Was there volume at a certain price level? That's useful. The other is maybe interesting. This is useful. 1740 at GC would then open the door to GC short, GC puts, MGC short, or as you mentioned there, the GLD. But I needed to move up to 1740 on the GC. Not that this level isn't useful. Again, it's the 13 exponential propulsion, and that is sitting at 1730. Treat it maybe as aggro. I would not sort of back the truck up as it would be. I would not do that at 1730, although it could be useful, but 1740 GC would be then the catalyst for an entry on MGC and those GLD puts. So thanks for the question. Next up, Julian, can we take a look at the VIX? Sure. So much like GC, Julian, I will start with the futures version of the VIX. Now, the VIX you might see roll. This is the rollover right there. We went from one contract to the next. We went from July to August on the VIX. There's your contract gap. What's a contract gap? Where was July trading when we rolled from that being the front month to August being the front month? And that difference in price of the July contract and the August. And by the way, gang, futures contracts have different prices because remember, futures contracts are designed to allow us to understand what the delivery cost would be for that thing. That's in the most basic commodities futures thinking. Now, remember, I'm not taking delivery on the VIX, but what is the opinion of the value of the VIX for the July contract versus the August? They're not going to be the same. They're going to be different. And that difference is what makes that gap. Are we oversold on the VIX? I do believe we're sitting at an oversold level at the VIX. Why do I believe that? I trade what I see. I accept what is not what I would like it to be. And we are still in an oversold zone on the VIX, which means that unless we're going to break the support of this area here, call it around 24 and a half, there's more at some point a likelihood that we put in a minor high on the indices or a inside candle on the indices and look for movement back down into the range, not into a downtrend, but simply back down into the range on the broader averages. And that's what the VIX is communicating to me, where the support is. Thank you, Darvis 2.0. And what if we were to move higher, aside from the contract gap higher, what that would mean to the indices. But remember, the VIX isn't causing the indices to do anything. It's just a reflection of psychology via this one indicator. What's up, girl? Oh, the puppy sees something outside. Hey, I got the show going on, so manners. All right. Let's see. I don't know if I can show you all the pup. She's just looking right out the window. All right. Next up is Alan asks, first timer here. How can I watch a live trading session with you to try it out? We have trials for the main rooms, Alan. We do not have trials for the mastery, but if and when we have some kind of open house for the mastery, I will let you know. But you can certainly sign up for a trial of the futures room and check that out. Okay. All right. Next up is, hang on, gang. Get to the next question here. And that is, all right. Next up is Ambas asks, other than technicals, sure, what other reasons am I bearish with XLF? Let's pull it up here. So other than the technical levels, so technical levels, again, technicals, indicators, they take open, high, low, close, they crunch it through some sort of algorithm, and they spit out a result. And that result is what we as traders look at to determine what we think about what price action is doing. I know a lot of people are fans of naked charts, right? And they're fairly arrogant about it. I have no time for that. Whatever it is someone needs to visually understand what's happening on a chart, that's great. That's perfect for them. From time to time, I'll look at someone's charts and go, wow, that's a lot going on. But then I remember, heck, that someone could say the same thing about me. It does crack me up from time to time when some dope wants to tell me your charts are too busy. No, they're exactly what I need. So technicals are very subjective, right? How many we need and what it communicates to us. However, they are studies of price. When I look at price, I look at this chart, we're stuck in a range after a downtrend. The downtrend still would be the dominant psychology. Look, we've rallied before. I mentioned this in the video yesterday. We've rallied before, only to continue along the bigger direction that we have in the market. The one thing that is probably most notable about this bounce in July versus the one we saw in June. What's the difference, Rob? Because it doesn't look too different. Does this mean we're going to continue on in a downtrend? I actually don't believe we're going to continue on in a downtrend. But again, much like the indices, I do think we're overbought and that we could sink back into the range, which is a very different conversation than saying we're going to hit lower lows. I actually do not expect significant lower lows any longer in XLF or even in the indices, but I do expect an overbought retracement, an overbought move back into the range, which still can be profitable. I don't need lower lows, right, to have a short from an overbought high and sink perhaps maybe to any one of these volume ledges or even the midpoint of the range, which is a really easy way to play range-bound markets where we have directional bias. So I'm looking at the structure, but the thing that's different now is that in June, we were still going back and forth between where the target rate probability was going to land us. Right now, and if you're wondering why is the market in such a good mood, it's not out of nowhere. It's actually pretty easy to measure, and we can measure it right here. This is the December contract for the Fed Fund futures. Look who is all sorts of tall and awesome now. Gang, we are largely expecting one less quarter point hike from the FOMC. This has been the target rate for most of the year. This has been where most of the action has been. This has been sort of the expectation that's most widely anticipated. And now as we go into December, we're expecting 3.25 to 3.5. Does that mean that's going to be the top? If I can go from December to February, February to March, and we're still sitting toppy at 3.25 to 3.5, why are we higher? Because it seems that the Federal Reserve is going to cut 1/4 point. I'm sorry, hike 1/4 point less. What are stonks not to like about that? If we start moving back to a peak of 3.5 to 3.75, which is where we've been, then watch how the equity markets start to, you guessed it, sell back off. That's where the heart of macroeconomic understanding as far as why the equity markets are up versus down. This right here will distill every single inflation number, growth number, and jobs number from here to December. We've got a good idea of where we're peaking. This becomes the main page for your macroeconomic understanding. All right, gang, and just like that, our 20 minutes is up. Thank you, as always, for joining me for our Charts and Coffee morning show. We're here Monday through Friday. Come rain, come shine. And we've been doing this. Gosh, this will be the second year. This October will be the second anniversary of the Charts and Coffee show. So again, thank you so much for tuning in. Thank you so much for the questions and the comments and for smashing that like button. Lets us know that, hey, we're heading in the right direction. This is content and time well spent. I never want to waste your time. So thank you as always for being here with me, with the crew, with the Caffeinate and Dominate crew. I'll see you all on Sunday for our weekly report show, kicking off the week, Sunday evening as the markets reopen. All right, gang, be good to each other. I'll talk with you soon.